GM, it is Tuesday, the 23rd of September. This is morning market, so let's dive into it. When we are looking at Bitcoin on the higher time frames against stocks, you're seeing stocks push to new all-time highs while Bitcoin is flirting at the moment with a potential lower high here on this time frame. So let's dive into it. Why is this happening? Well, the latest news relates heavily to interest rate cuts. So we've seen some Fed members, they've come out and they've said that they're hesitant to support additional rate cuts in October. And they're talking about persistent inflation, with the Fed's target being 2% still. And they've also had other Fed members talk about there's risks of inflation increasing and that tariffs, potentially the impact on them hasn't been fully yet realized on prices, and that the balance of risks must shift further to justify lower real rates. So what does that all mean? Well, it's very simple. Fed members, the reason they're coming out and talking down on further rate cuts is because of one thing. The stock market is at new all-time highs. The stocks, they are not reacting bearishly at all to any US economic weakness. In fact, they're strong. The Fed, they start talking good about the markets, talking positive, talking about rate cuts when the stock market crashes like this. That's when you had the Fed come in saying that they are able to provide liquidity if needs be. That led to the literal exact bottom on stocks during this tariff dump. So now, when we're in price discovery, they're going to have to talk down on monetary policy because they have no reason to talk positively about looser monetary policy conditions. While stocks are at all-time highs, generally businesses, investors, wealthy people who we know own assets, they're all very happy right now because their portfolio is at all-time highs. Therefore, there's no reason to cut rates or NQT while this is the case. You need to see some sort of crash on the stock market, or at least a dip. At the very least a dip. And until then, you'll probably see more comments like that come out from the Fed. And what's most interesting is that Bitcoin is meant to be the leading indicator of liquidity. As you can see, during this tariff dump, Bitcoin had bottomed out really on the 27th of February here on this day. It then had one sweep and two sweeps, but this was overall a bottoming formation. You didn't have any further downtrend continuation here. This was building a base. Whereas during that time, stocks, they absolutely plunged, just going straight down while Bitcoin went sideways. And I remember telling you guys about this. This is when I said Bitcoin is back at the 50-week EMA, stocks have crashed to the 200-week. I'd been accumulating cash and I deployed half of that cash into Bitcoin at 75.2K, which filled. This was known as Black Monday. It arrived for stocks. And the move on stocks was similar to '08 or COVID, whereas Bitcoin was showing outperformance. It was showing strength. And as the leading indicator of liquidity, what did we see? Well, as I said, the Fed came out, they said, we're going to support markets. We have ample liquidity if needs be. And Bitcoin absolutely ripped. Stocks then ripped too, of course. So by that same regard, if Bitcoin is now underperforming, you have to look at this and say, is this potentially a bad high time frame signal for future positive liquidity conditions and furthering of the easing? Because the charts on Bitcoin would tell you that now. And it doesn't matter whether you're bullish, bearish, Who cares? High time frame, I think Bitcoin's going to 1 million. But you have to look at the reality of the situation and at least be open to all sides so that you have a plan for all scenarios. That way you know what to do as a trader. You're never in a situation where you're worrying you're going to miss a move because you have a plan for either way. And the reason I say that is because not being an ultimate bear here, but so far, seeing this lower high, seeing Bitcoin in reaction to FOMC being down while stocks are above its FOMC low, gold is above its FOMC low, even the dollar is above its FOMC low. It is a show of weakness for Bitcoin and for crypto. That is as clear as you can get it. In reaction to a rate cut, Bitcoin has dumped. Now, could this be a lower high? Sure. I mean, if I show you previous examples, if we go to the September situation from, let's say, 2023. Here you had Bitcoin building higher highs and higher lows. Could we be doing the same here? Could Bitcoin just chop, build a higher low before going higher? Much like this here in late September, you got the dump before then building that higher high. Who knows? Potentially it could. It would not surprise me at all. Nothing should surprise you in the markets, especially at this stage in the cycle. You got to play it level by level because, you know, it's not like this is the absolute most amazing place to buy Bitcoin in a 2-3 year period. And also, it might not be the most amazing place to sell Bitcoin at 114K as it stands. However, what we've seen is some clear levels. So take you to this chart here. You have 120K, you have 115K, and you have 110K. Super simple. These also are your options expiry level this Friday for the big Q3 OPEX. So the closer we get to Friday, the more price is going to stay pinned between currently it's 110 and 115. If you get above 115, then that can take you to 120. And below 110, of course, you then have 108, and losing 108 really opens up the door to 105, and likely momentum can take over from there. So those are the levels that we're looking at today and this week. Currently, we've broken down from this consolidation. So anyone who got long here is now underwater. That is overhead supply now. This is resistance. If we do come up towards 115K, I would be looking for shorts here on any reversal setup. Maybe you get some sort of head and shoulders form and you can get short on the break. I'm not sure, but that is the high risk reward area. It's filling in some of this gap over here. Anywhere between this box and 115. That's your sweet spot to look for shorts on the way down if you get confirmation. Because price should reject there. It's a big OPEX level, and it's also this resistance. It's also the round number level, which has been respected over and over throughout this range. So you expect it to continue. Therefore, I wouldn't be getting short here within this consolidation or long here within this consolidation, because you could either go up, wreck all the shorts, everyone getting overly bearish in the New York session. It could literally be something that Powell says today in his speech, which wicks the market up before whipsawing back down. That wrecks your shorts, and then you wreck the longs, and vice versa. Price could easily just continue down before having a rally up to 115, where again, you could be patient and find the short, as opposed to getting long in this consolidation, getting wrecked, and then you're left not really knowing what to do, and perhaps then you FOMO in and long the top. That's not what you want to do. High risk to reward areas are clear. For shorts, you're looking for rejection over here. If we can reclaim this level with a big impulse and hold 115 on a retest, well, now you can look for longs again. And that would confluence with reclaiming those daily 12 and 21 EMA bands. But I don't think that's likely given the magnitude of the sell-off yesterday. Seemingly, the sell-off was for no reason as well. Therefore, it was just real buying and selling, and the sellers overpowered. Therefore, it's unlikely to retrace, in my opinion. But of course, we don't know what's going to happen. We react. We don't predict as traders. Therefore, if it does flip 115, look for it to hold on a retest, and you can get into longs, in which I would think a move to 120 can then open up. And I still do think, whether it's this month, whether it's next month, we can reach 120k, even if this is high time frame bearish. As I've been saying, 120k and topping out there could just be part of this entire distribution on Bitcoin. Of course, bullish scenario is flipping 120k. That will then lead to potential new highs. So you're at this moment where we're in a range. We've got mean reversion conditions. There's no clean trends on the high time frame, at least. So you can look for longs, and you can equally look for shorts at those high risk to reward areas or on the reclaims. Now, if we do consolidate, continue the downtrend and go to 110, and you see some nice reversal pattern, maybe a double bottom, then potentially you can look for longs over there too, trading it towards 115k. Those are your high risk to reward areas. Again, within this consolidation, you got no edge really here. Maybe there was a move overnight. If you caught it, well done. You got this lovely sweep here, reclaim, you could have got long, but you should be taking profit here. Now we're back at the highs of this consolidation, because it's been 1, 2, 3, 4, 5 1 hour green candles in a row. That can easily retrace now and just simply continue going nowhere. So while you're in a downtrend on this time frame, you expect the downtrend to continue until structure starts getting reclaimed, 115 reclaimed. Therefore, targets are 110k if you are, of course, short from higher. So that's really it for Bitcoin. It's yet to be seen. Is 110k going to hold? Or are we going to see price lose 110k? And I think if we do lose 110k, that sets up for new lows and continuation of this downtrend. So that is how I would play it. Super simple. If we reclaim 115, I'd look for swing longs again. If we lose 110, I'd expect new lows. That's my personal plan. Now, will I take some intraday shorts if we reject 115 and if we find support 110? Yes, I will. They will most likely be day trades though. Regarding swing trades and higher time frame, that's my plan. I know a couple of you asked me for potential DCA levels on Bitcoin. So I will take a look at that now, but bear in mind, this is my plan for swing longs. I've laid it out right there. I don't necessarily look at levels of where Bitcoin can go to, because it's not a completely fruitless task, but I'd rather just react to price potentially going to 105 after it's lost 110. Play it level by level, because nothing's promised in the market. We could go to 120, we could even break out. Nothing's off the table at the moment, especially when you're in a range. It Doesn't take much for price to rise, doesn't take much for price to fall. It's the break of either side of the range which will take a lot. It will take a catalyst on Bitcoin, which we currently don't see right now. Therefore, if 110K breaks, as I said in the monthly outlook and weekly outlooks, you would expect this summer low to hold. Because if this summer low doesn't hold, that's something you've never seen before in a bull market cycle. You have the summer low here, 2024, didn't get hit. You had the summer low here in 2023, didn't get hit. So you get the point. In the bullish years, in the 4-year cycle, summer low should remain intact. So now you know where you're wrong. If price does go below 110, then you're simply looking for the reaction of the 107K liquidity. Does it sweep, reclaim, build, reclaim 110? Then potentially you look for a move up towards 120. You can get long either if you want to be risky over here, or if you want more confirmation over here. If you want to just DCA, then a simple thing you can do is simply just tell yourself, here's the high on Bitcoin. I'm going to DCA once price goes 10% lower, once it goes 15% lower, once it goes 20% lower, etc., etc. It really depends on your time frame, because of course if you're holding Bitcoin long term, then the summer low isn't an invalidation for you. You can keep on doing this. You can say I'll DCA 25% lower, DCA 30% lower, and set up a buy for each of those orders. Of course, I prefer to have invalidations and trade it at this point in the cycle, because a 30% down move isn't promised. A 25% down move isn't promised. That could come in many months or many years from now. Who knows? Therefore, I prefer to trade it level by level, because with this method, you risk having a bunch of cash on the sidelines and missing on a huge move. Whereas if you wait for reclaims and play the rest of the cycle like a trader, well, then you don't risk getting left behind on any moves. And it's very simple. I'll show you guys my portfolio update. It's worth reading. I mentioned on the 11th of August, I took full profits at 121.1K on my Bitcoin cycle bags. And going forward, instead of an 80-20 Bitcoin to trading portfolio split, I'll be running 100% of my cash in my trading portfolio. So trading for the rest of the cycle. Because we are closer to the end than we are the beginning. That's very simple. We all know that. Therefore, I'm very happy with my TP at 121K. I mean, it's been literally the Pico top so far. And of course, I was buying at the Pico bottom, as you guys saw. I was also buying earlier, of course, during this cycle in the bear market. And having sold at this 121.1K level, I now have the luxury of being able to trade for the rest of the cycle and just waiting for a reclaim of 115. Or if 110K loses, then I'll just let price go lower and see where a bottom forms. Perhaps the bottom comes on a sweep of the 105K liquidity. And again, I'll just look for that bottom formation. Again, that doesn't have to be you. If you are a guy who wants to DCA, maybe you use these weekly 50, 100, and 200 EMA bands. It's something I've used in the past. The 50 EMA has been respected throughout this entire cycle. Once here, twice here, again here in September 2024. So you could have a DCA order around the 50, around the 100. You can also have a DCA on the 12 and 21 week EMA bands. Many ways you can play it. But for me, I'm playing it like a trader for the rest of the cycle, because I already took profits on my cycle bags at 121K, as I told all of you guys at the time. So for me, that is what's optimal. And that gives me a plan for playing it either way. It doesn't matter whether Bitcoin goes up or down. I know how to trade it. And that's why I took the swing long setup the other day, because I've already locked in the profits on the cycle bags. Now I just want to make sure I'm exposed in case there is a potential uptrend and we have more juice left. But if we don't, I'm also okay with that. That's the luxury of having taken profit there. So now, of course, as we head later into the cycle, the bigger interest comes from your altcoins. If we look at something like BNB, we've got Ethereum, you can see these clear rotations. So when Ethereum runs, that's when BNB was just moving up to its own highs. And then when BNB runs, that's when Ethereum consolidates. So eventually, we're going to see Ethereum have its own run, because the rotations will always come back, and I'm not sure if that comes from here. What I really want to see on Ethereum is, in the bullish scenario, we hold this range between the high time frame SR and the all-time high, and that will set up a breakout. And if we can't hold the range, then look for it to have some relative strength on the downside compared to the rest of the market, and hold between these levels, the yearly open and the high time frame SR. So either scenario there, really looking on ETH. Ideally, you want to see Monday's low hold. You're already seeing it hold, whereas Bitcoin relatively has been weaker here. So Bitcoin is actually had a sweep of its low overnight, whereas Ethereum didn't. That is some relative strength on ETH. You look at something like Solana, it swept its low and is actually red right now, so that's relative weakness on Sol. And it's simple. Again, what did I just show you guys? Sol has been trending. BNB has been trending. So what are you going to see? If I wait for this chart to load, it doesn't want to load. That's okay. So we have BNB trending while Ethereum is going sideways. You have Sol trending while Ethereum is going sideways. So now you start to see the outperformance very subtly on ETH, because what's happening here is dumb money is getting excited on BNB, it's getting excited on Solana. And sure, while it holds its bands and holds its momentum, BNB can go higher. Doesn't mean the top's in here, it just means dumb money is now starting to chase the move on BNB and Solana, and they've got bored out of Ethereum despite it having a huge move. Just because it's cooled down since August, traders are no longer interested, and that's why you see this small outperformance where Ethereum hasn't even swept its Monday low, despite BNB and Solana all sweeping their respective Monday low. So keep an eye on ETH. If we look at ETH Bitcoin, go to the weekly, it remains in solid structure here actually. We can remove all of this now. It's impulsed up, consolidated, impulsed up, consolidated, impulsed up, and you're having this slow consolidation. It's taken 1, 2, 3, 4, 5 weeks to retrace a 1 week move. That is what you want to see in an uptrend. You want to see it go up fast and consolidate slow, because that means positions are churning, they're switching hands slowly and slowly. You would never want to see a big rapid retracement. So imagine prices going up, it's going up, and then you see a big violent retracement. That's not good, because that means sellers are absolutely just outweighing demand. It's more bullish if you see slow chop like a bull flag, then impulse up, slow chop, and you're getting that on ETH Bitcoin here, which is quite promising. And you're entering the area where you've come off the highs here on ETH Bitcoin. It's underperforming. Therefore, you're getting an opportunity where ETH is relatively becoming cheap compared to Bitcoin. And you're seeing price-wise in USD terms, it's holding up stronger than Bitcoin. So I'm actually interested in Ethereum here. Not sure if it's ready to go now or we still have to wait. Let's take a look at some trend bands to see what it's respecting. It's not respecting these daily 12 and 21 bands. So the 50-day EMA Currently, price is closed through, but if we can reclaim this 50-day EMA, that can potentially set up some interesting longs here on ETH. So this is your 50-day EMA here. If we can get above it, I think that can set up a move to fill in this gap over here, even if bearish, and we then top out and have to form a proper bottom later on. I think on Ethereum here, the target really is this consolidation that we broke down from. And that's, of course, if we can get above the 50-day EMA over here. I will be looking for longs to trade this move towards these order blocks here. That's what I see most interesting today on the long side. Otherwise, just let the markets play out. You've had a big liquidation. It always pays off to give it a few days, let the market do its thing. Look at something like Bitcoin on these previous big liquidation days. I know this is a notable one. Price rallied, but it came back for a retest. If we see all of these liquidations, you got liquidation day here, big liquidation day here. What is price doing? It's retesting it, retesting it, retesting it, retesting it. Another big liquidation, just retesting all of these wicks. Go up, retest it again. You don't need to panic on the day where you have this huge red candle. You just have to now let it play out, because most likely we continue consolidating. But again, levels are clear on Bitcoin, levels are clear on Ethereum. Reclaim this 50-day EMA, and potentially you can look for setups for longs on Ethereum up towards where we sold off from. That's where you then have to see our sellers coming in again. So that's really it for Ethereum. Check the weekly time frame briefly, see if there's any trend supporting bands coming here. So we are actually wicking towards that weekly 12 EMA, which is also another confluence. You got the high time frame SR level here. ETH really has to hold this level. That's why I think it's setting up for some good risk to reward here potentially, if we do see those reclaims, because if ETH starts closing below this level, which it can, it opens up a move to fill in this bullish gap over here. Any of these gaps. Therefore, as long as price is above that high time frame SR, we're at range low and potentially decent risk to reward if Bitcoin can hold up. But of course, if Bitcoin isn't going to hold up, then again, just watch Ethereum. Does it continue outperforming on the downside? Does it have to perform a proper bottom here with a sweep? Then potentially that's going to give you an even better setup where you can have even tighter risk to reward on the reclaim, because your stop can then go at the sweep low and you can trade it towards the all-time high and potentially even a breakout and getting really favorable RR there. So another day for watching. Potentially some setups if we see reclaims across the market. Most interesting is Bitcoin and Ethereum. You've got Solana and BNB moving, but they've taken off quite a lot now already. We look at something like Hype. Let's see what it's doing. That's been another runner. So we got the touch of the daily demands, led to a new high. Just finished shy of $60. Now fallen below $50. So you're getting this continued chop on Hype, which is absolutely brutal for a lot of traders who are on the wrong time frame. So really now we see the 100-day EMA be support before. Is that going to be support again in the coming days? You don't have to expect a V reversal. That's unlikely. You got to see some chop, probably some consolidation here. And maybe that confluences with this 100-day EMA band rising, where you can then look for that trend respect as you have seen previously. But below 50, bears have momentum on Hype. So not as much interest until we let price play on. So again, The day after the big red day is really the best day to start looking for huge positions. It's probably another day for watching, but those are your levels to look out for on reclaims. That's what I'm looking for on Bitcoin. That's the high time frame breakdown, the low time frame breakdown for BTC. What I'm looking at for swing longs, day trades, what I'm looking at on Ethereum for day trades and potential swing longs, and the overall market. So, interesting one. Again, seeing gold outperform. It broke out yesterday, so not what you wanted to see for Bitcoin, as I mentioned in morning markets. This now sets up for continuation higher on gold, which is at the detriment of Bitcoin, which is suffering because of it. It's still not so bad in the sense that we haven't dumped massively. We haven't actually hit 110 yet. That is a positive. However, if this continues running higher, well, the reason gold rallies is due to some sort of potential uncertainty in the market, some sort of risk off event like global tensions that could be coming ahead. Gold doesn't rise when everything's beautiful in the world. Gold rises when potentially something is wrong. And also, of course, it rises in response to easing of liquidity, but in that scenario, you would expect Bitcoin to also be strong, which it isn't. So at the moment, you're seeing stocks at new all-time highs rallying because they're getting all this investment into AI, and that's absolutely booming all of the sectors in the US. You've got gold rallying to new all-time highs because they have a clear buyer from China who are aping into gold every single month through their central bank. Whereas Bitcoin, you're seeing the buys from Saylor dry up. You're seeing Master dry up. You're seeing these Bitcoin treasury companies, they're not pumping the price at all. No matter how many treasury companies you now create, it's not leading to price going higher. So Bitcoin is showing exhaustion here. And that is why I have caution on the high time frame, given it's a leading signal of liquidity, given that stocks are pushing, gold is pushing. Yeah, you do just simply have narrative exhaustion on Bitcoin, and it is in dear need of a new catalyst. So I'm not sure where that comes, not sure if we have to bleed lower in September. Really just watching from here. We have OPEX on Friday, so the closer we get to that, the more price is likely to stay pinned between these levels. So we have 115, we have 110, and we have 120. Expect them to reject. If they flip, you can see price appreciation. And of course, if they flip on the downside, you can expect price depreciation. But overall, expect them to hold as support, resistance, pivot levels. Now that is it for morning markets. That's a big deep dive. Hope you guys enjoyed. Let me know if you did in the comments. I'll see you guys in the next one.